On the last trading session of a Friday, gold spot printed a closing price little above $1,827 per ounce. Numbers rounded and the market is closed. And on the last week, gold traded as low as $1,801 per ounce and as high as $1,833 per ounce. Numbers are rounded and the market is closed. Gold's trading in a bull trend. We are trading at the moment above all the daily simple moving averages. Worth noting that still the short-term moving averages are below the long-term ones, which is somehow a bearish sign. The RSI readings is moderate on all the charts. Moving to the supports, we have the supports at 1800, then 1770, then 1680, and the resistance levels 1833, then 1845, then 1869. Now, the pivots on the weekly and the daily chart, daily on the last trading session. So we have 1820 and 1823. Those consider them as supports where the price could find a support. That's all. Moving out to the economic calendar. On the economic calendar for the coming week from the United States, Monday it's a holiday in the United States. Then on Wednesday, jobs openings. On Thursday, initial jobs claims, and on Thursday also some of the Fed members are going to deliver speeches. That's all for the economic calendar. We'll move on now to the trading strategy. Hi again, it's always nice to meet you in a new episode of our Gold Price Weekly Forecast. Gold today. If you are new here, we usually do the following. We will start by examining the US dollar chart, and then we will look at the gold chart. We'll make some conclusions. Based on these conclusions, we are going to trade for the coming week. Now, starting with the US dollar chart, we are looking at the daily chart of the US dollar. The US dollar have had, let's say, a massive sell-off in the last week, or continued its sell-off in the last week, and especially the sell-off gained steam after the release of the NFP on the last trading session of Friday, because the NFP was a big disappointment. Now, on a fundamental point of view, or from a fundamental point of view, you can say that the US dollar should resume its sell-off because simply the market, if it was afraid that the US dollar is going to rally on the back of tapering, now the Fed is having more time, because always the Fed is taking the labor market situation as, let's say, as a card. They play it every time to buy time to delay the tapering. So fundamentally, the US dollar should continue its sell-off, and technically, if it breaks below 91.8, it has to go to 88.6. Now, moving on to the gold chart. The gold chart, and despite of the continuous rise in the gold price, for me and from a technical point of view, does not look really as a great chart. And despite of what is going to happen with the US dollar, as I said, if the US dollar is going to break down, usually gold and silver and anything else that is priced against the US dollar is going to increase in the value. So gold and silver are not exceptions. But my points against this chart is like, look at how many times this market was about to do a massive sell-off by building an evening star. Then the other day the market turns around and it rallies because there are some fundamentals came out, okay, and changed the direction of the market. Usually when the market creates more than one bearish setup and then it's violated at a certain point of time, the market will do a sizable drop. For the time being, at the moment, I cannot find a justification for such a sizable drop to happen either in gold or silver, considering what I have already said or told you about the US dollar, because I said that the US dollar maybe is going to do or throw a massive correction. But from the chart itself, the chart of gold, it looks like a retracement after a massive sell-off, but not a chart for an asset that it's going to rally. However, to cut this short, look at 1833. Now, 1833 is very critical level, because simply gold was rejected 3 times before the major sell-off that we have had on the last month. So if gold can trade and close for more than one session in a row above 1833 and build a base above this crucial level, we are going to have a rally that could extend up to 1870 to cover all the gap, and maybe little more to 1900 or 1950 even. On the other hand, if gold finds a rejection at 1833 for several sessions, maybe gold is done to the upside and it will turn around. Whatever, even it could sell off alongside dollar. It's not a big deal. However, that's all for our video for today. Thank you guys for watching. Please share, like, and subscribe, and I will see you next week in another video.